Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Let's get started. 2023 census reveals that home ownership in New Zealand has risen to 66%, reversing a decades-long decline, while Auckland has the lowest ownership at 59.5%. In Slovenia, 57% of residents are now aware of AI technologies, with 21% actively using tools like ChatGPT. Among young people, usage is even higher at 55%, highlighting the country's growing engagement with generative AI. Estonians are increasingly adopting smart devices at home, with 57% using smart TVs and smart watches, seeing a 60% rise in adoption. Internet-connected appliances and security solutions are also gaining traction, reflecting a broader shift towards smart living. In Turkey, unemployment remained steady at 8.5% in August, though gender disparities persist, and this data underscores ongoing challenges in achieving labor market equality. The European Investment Bank is launching initiatives to close Europe's funding gap for startups, aiming to keep innovative companies from relocating to the US or China. The expanded European Tech Champions initiative will help scale European unicorns. And Britain is accelerating the approval process for AI and tech innovations with its new Regulatory Innovation Office. This move aims to boost economic growth and streamline regulations for industries like healthcare and space. Romania has announced an €804 million investment program to support the clean energy transition. This initiative focuses on green energy projects and improving energy efficiency. A new survey reveals that Germany's attractiveness as a business location is slipping, with 48% of international companies reporting concerns about the deteriorating business environment. The IEA projects that renewable energy will grow massively by 2030, adding over 5,500 gigawatts of capacity. Solar power is expected to drive 80% of this expansion, with China leading the charge. Germany's self-employed business climate continues to decline, with the index dropping to minus 21.4 points in September. Economic slowdown and the lack of new orders are weighing on sentiment. The IMF warns that global public debt could surpass $100 trillion by the end of 2024, posing significant fiscal challenges for many countries, especially as high spending pressures continue. Trade risks in Belgium are surging post-COVID, with 87% of sectors now facing medium to high default risk. Sectors like construction, textiles, and metals are particularly vulnerable. Employment and labor force participation rates in OECD countries have reached record highs in the second quarter of this year, with unemployment holding steady at 4.9%, and this reflects a stable global labor market. In August, the U.S. trade deficit shrank by 10.8%. And the strongest gains were seen in capital goods and industrial supplies, while the automotive sector led the decline in imports. Trade surpluses were recorded with countries like the Netherlands and Brazil, but the largest deficits remained with China and the European Union. And again, IMF warns that rising economic policy uncertainty could undermine financial stability, delay investments, and tighten credit. As uncertainty increases, it poses a risk to economic growth, and the disconnect between uncertainty and market volatility highlights the need for transparent and prudent policymaking. Industrial production in the euro area rose by 1.8% in August, with a 1.3% increase across the EU. Annually, growth remains modest, with the euro area seeing a 0.1% rise and the EU 0.2%. Going back to the UK, consumer inflation cooled in September, with the CPIH rising by 2.6%, down from the 3.1% in August, and the core CPI also slowed to 1.8%. And the key contributors to this decline were lower transport and food prices, easing inflationary pressures in these sectors. World Trade Organization has revised its 2024 global trade growth forecast slightly upward to 2.7%, driven by stronger exports from Asia, while Europe continues to struggle, particularly in the automotives and chemicals sector, and Asia leads the global trade recovery, with regional conflicts and policy uncertainty still posing risks. Going back to Turkey, its residential property price index rose 27.4% year-on-year in nominal terms in September, but in real terms, prices fell by 14.7%, reflecting the challenges posed by high inflation and the shifting real estate market. Croatia saw a notable rise in consumer prices, with restaurants and hotels leading the increase at 10.8% year-on-year in September. So other sectors, including miscellaneous goods and health, also saw significant price hikes. And lastly, Hungary's industrial production plummeted by 9.5% in August, with exports down 6.3% and new orders falling by nearly 11% year-on-year. And this sharp decline reflects ongoing challenges in Hungary's key industrial sectors. Thank you for watching, and remember to subscribe to our channel for the latest updates.